What's up everyone, it's Scotty with Money Vesting. So in this video, we're going to talk about one stock that is on my radar and it's going to be my next big position. And no, we're not talking about Enphase Energy. Enphase is indeed going to be my next big position that I've already talked about, and I'm already starting to build a position on that stock. You guys know what my fair values are. You guys know what I'm doing with that company. I already have a built position, a little bit skin in the game, and we'll continue to dollar cost average a little bit more. I've done a lot of analysis and research, and spent a lot of hours kind of studying Enphase. So make sure that you do check out those videos if you're interested. But in this video, I wanted to share a brand new company. This is a company that we have talked about a lot on the channel before, but I've just never been able to own this stock because of the valuation. And valuation is still going to be a concern today. So I know there's going to be people out there, commenting, few people commenting, why bring this stock up right now when it's already at all-time highs or it's moving higher? Because it's still got a lot of potential and we can put it on our radar for when it trades at the fair value, if and when it actually trades at our fair value, right? Like I said, a lot of the times, trading and investing, people think that you have to make predictions. You have to constantly be predicting what the future is going to look like. That's not the game. The game is for us to understand where are we willing to buy? What is our fair value, right? If the stock comes down, so the difference is, the subtle difference is, if you ask me, Caddy, what do you think, where is Apple going next week? My simple answer is going to be, I don't know. But if you ask me, where would you buy Apple? I have a very specific answer for that, right? I'm happy to buy Apple at 120s, 110s. That's my fair value, right? It doesn't matter where Apple goes, but because with investing, we're not really focused on where the price is going. We're more interested in getting good deals. That's the idea. And that's exactly what we're going to focus on with this company. I'm going to go over the intrinsic value. We're going to talk about the fundamentals, the qualitative and the quantitative analysis, the balance sheet, the cash flows, everything. And then, of course, do some technical analysis as well. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below if you're interested in joining. And, of course, getting access to all the buy and sell alerts, options alerts, trade ideas, intrinsic value spreadsheets, everything's going to be included. Link's going to be down below. So the company we're talking about today is going to be none other than ASML. This is, in my opinion at least, a very, very strong company, must-own company for me personally. But of course, valuation is going to be a little bit in question here. We'll talk about that in just a minute here. But of course, the stock price has performed really well since 1995, up over 55,000%. And of course, trading at over $754, just over $300 billion market cap company. Now, I have done videos on ASML, but this is going to be a lot more detailed, going over specific things and what the company does. So what they specialize in are producing these really, really big EUV lithography machines. These are used by chip manufacturers, right? These are used by semiconductor manufacturers, companies that are actually producing the chips. So ASML is basically providing the equipment to the manufacturers, for the manufacturers to produce the chips, for the designers, and then for the designers who sell it to the other companies. So it's a whole process. And as we know, the semiconductor industry has been booming, right? It's been going crazy with this new artificial intelligence and AI boom. And Nvidia, of course, being among the biggest winners in this space, up over 200%, trading at an all-time high. ASML, Nvidia's entire business, AMD's entire business is kind of dependent on these companies, right? On ASML more specifically, because if ASML doesn't provide these lithography machines, TSMC, Intel, who are some of the biggest customers of ASML, can't produce these chips for the designers, which are, at the end of the day, NVIDIA and AMD. So that's why ASML kind of is a very, very integral player in this entire semiconductor and chips ecosystem. So this right here are going to be some of the qualitative analysis pieces. So ASML, Advanced Semiconductor Materials Lithography, that's what they stand for, is a Dutch, so they are based out of Netherlands, multinational corporation that designs and manufactures photolithography machines for the semiconductor industry. And these machines are used to create the tiny circuits that are essential for modern electronic devices, such as smartphones, computers, and cars. And ASML is the world's leading supplier of lithography machines, and its products are used by all the major chip makers, so including Intel, TSMC, being, just naming a few here. And the company's machines are so advanced that they are considered to be the strategic asset by many countries. For example, the United States government has placed sanctions on the export of ASML machines to China, of course, due to concerns about the country's growing technological capabilities as well. Now, this right here are going to be some of the patents. So patents, they own over 15,000 patents worldwide. And these patents cover a wide range of technologies, including lithography, metrology, software. The company's patent portfolio is significantly competitive advantage as it gives ASML a monopoly on certain lithography technologies as well. And of course, they've got a pretty big customer base. So these are some of the key patents that they have. And this patent covers a method for using EUV light to pattern semiconductor chips. This patent covers a system for controlling the exposure of a semiconductor chip to EUV light. And this patent covers a method of measuring the circular or the critical dimension of a semiconductor chip as well. So those are just some of the few key patents that ASML holds, and of course creates a very, very high barrier of entry. So it's not like any company can enter their space and drive down their return on capital. Very, very important to protect your moat. And in this case, ASML, in my opinion at least, has a very significant moat. Now, obviously, that's translated over to very strong numbers. So you can see that revenue has grown from $7.2 billion to over $22 billion. So very, very nice, consistent growth. Gross profit also very nice, $2.8 billion to over $11.4 billion. That's a 50% gross margin for a company that makes machines, for a company that makes equipment. Can you believe that? 50% gross profit margin. That's phenomenal. Operating income has gone from 1.7 to over 6.9, almost $7 billion. So very, very significant growth here. And net income, of course, is a profitable company, gone from 1.6 to over $6 billion. And of course, shares outstanding have gone down from 433 million down to under 400 million shares outstanding on a diluted basis. That's a little bit over 1% share buyback every single year, exactly what we look for. And EBITDA has also grown from 2 billion to over 7.4, almost $10 billion on a trailing 12-month basis. This right here are going to be the earnings expectations. So from $21.11, expected to grow to over $45. That's a 100% increase, right? More than 100% increase in the next 4 years, right? So that's 1, 2, 3, 4. 4 to 5 years, that's over 100% increase in earnings for this company, and revenue is expected to reach up to $56 billion by December 2029. So that's the growth expectations. Very strong margins. Like I said, 50% gross margins. We got net margins of 28%. Return on capital, common equity, and assets are absolutely fantastic, like A+ across the board. So, it's a really well-run company, guys. This is like literally a company that is, in my opinion at least, a must-own and will potentially become a much bigger sizable position in my portfolio eventually. Of course, we just have to figure out the pricing. So that's really important, right? You can find great assets. It all comes down to pricing, right? We just have to find the right pricing. And once we get the right prices, once we get the fair values, then we can continue to build out our position, establish a bigger position because, like I said, ASML, A+ financials so far, everything that I've looked at. This is the valuation. We're going to come back to that. But balance sheet here, over $7.2 billion worth of cash and $4.3 billion of debt. So that gives the company a negative net debt of less than $3 billion. So that's going to be the negative. So more cash than debt, very, very strong here. Very good current ratio, 1.24. Debt to free cash flow, a little bit under 4. We look for this number under 3. But again, the company's got more cash than debt, so it doesn't really matter. And then finally, coming over to the valuation, price to sales trading at over 10 to 11, which is a little bit more on the higher side. And of course, price to earnings multiple trading at over 35 to 40 times earnings, which again is a little bit more on the higher side. And the PEG ratio is going to be a little bit over 1.4, which I guess isn't terrible, but we're looking for deals, right? Again, I'm cheap. I want to look for deals. I want to pay 50 cents for $1. That's what I'm here for. That's where the real money is made. The real money is not made by paying more. It's made by paying less. Remember that. So again, we just have to figure out, okay, what's the right price to buy ASML, right? What's going to be the appropriate level to be buying it at? So if you come over to the expectations here, so $21 to $45, that's over a 20% growth rate, right? That's a little bit over 20%. So this is a growth stock. I consider ASML as a very good growth company because revenue, earnings, over 20% CAGR. We've got very strong return on capital, assets, and equity. We've got very strong balance sheet. We've got consistent share buyback. So it kind of hits all the check marks that I look for. So if you go with a 20% growth for the company over the next 5 years, and then discount rate is going to stay put at 12% because I don't think they pay a dividend. Just going to confirm. They pay a very, very small dividend, less than 1%. So we're going to keep that at 12% discount rate, 10% margin of safety, minus 1% in share buybacks because they have been consistently buying back shares. And then finally, the P multiple, I'm comfortable paying 25 times multiple on ASML. And that brings our fair value to actually 716. We're not that far off. 754. We're not that far off, only 5%. I could even lower the P multiple a little bit just so I have some more area, like some more room, margin of error here. So 20 times P multiple brings us down to like 573. So sub 600 is where I would be very, very interested in at least getting a little skin in the game, and starting to kind of build out that position. So sub 575, more precisely 573, would be my starting point on ASML. Of course, we want to buy something that's undervalued, not trading at fair value. So preferably it would be under 573. Anything under 573, in my opinion at least, would be considered as undervalued for ASML. But 20% growth rate, 20 times P multiple, that's going to keep our PEG ratio locked at 1. So that's a $573 fair value, but of course you can kind of decide that for yourself depending on the different P multiples and different growth rates. You can kind of figure out what your intrinsic value might look like on this company. So let me know your thoughts down in the comment section below about ASML, and if you have done some additional research or analysis, also share that in the comment section down below. But sub 575, as I'm saying, is going to be the level to watch. And technically speaking, again, you can kind of see that it's been trading inside this uptrending channel. So that's the red channel you see, the higher lows and the higher highs. A couple times it's traded outside of that range. This was back in 2000 during the dot-com bubble. And eventually it burst, it dropped over 90%. But even a couple more times in 2007, of course, dropped 64%. And then a few more times it has seen significant sell-offs. So from its peak in 2021 all the way down to as low as November 2022, it dropped almost 60%. Of course, missed the boat there when it was trading at 356. That would have been a steal for ASML because, again, it's rallied a little bit over 100% since then. So that's the technical analysis. Of course, the all-time high sits at $879. So that right there is going to be that resistance level and potentially the next target. They are going to be reporting earnings next week. Support level is going to stay up roughly around 690. But I would be, like I said, a lot more interested in this region. Of course, I would go crazy at 350s if and when we actually see that price for ASML again. So that's going to be the entire analysis. Let me know your thoughts down in the comment section below. If you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.